Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about AUD CHF because at the moment we do have quite interesting price action and structure. So starting here from the monthly time frame, what do we have? Now here in the monthly, we can see how the market has just created this W formation. Now, in general, after the creation of a W, what we want to see is the market create a move to the downside to go and complete the pattern at the previous resistance turn support. So from a monthly perspective, it's quite clear that we do expect a short-term correction to the downside, possibly at least to the 0.32 of the Fibonacci taken on the monthly impulse, therefore from this low to this high. So here on the monthly, we have a first downside target lining up at this 0.32 Fibonacci retracement, and we do expect a short-term correction to this zone. Dropping down on the weekly time frame, what do we have? Now, here on the weekly time frame, we can see how at the moment the market is finding resistance at the previous weekly high. In fact, we can see how we did get a very strong impulse to the upside, then we had this correction, the market then tried to create this continuation to the upside. However, it is now failing to break above this previous high, and there is the possibility to see a rejection to the downside for the creation of this double top at the zone. Going down on the daily, what do we see? Now, from a daily perspective, first of all, I made a full breakdown of AUD CHF after the market created this W. When the market was around this area, I explained all the reasons for which we expected the market to provide this rejection to the downside, which the market has now created. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. However, at the moment, what do we see? We can see how in creating this move to the downside, the market is now also trying to break below the support that is at this level. Now, why do we have support here? Because this level is previous resistance, which after the market broke to the upside, as you know, is supposed to be turned support. However, the market at the moment is pushing below that zone. Now, in order to have a break of structure in the market, you need to have the candle that closes below or above the zone, depending if it is a resistance or support. In this case, this is previous resistance turn support. Therefore, if we will have a daily close below the area, at that point, this level will be once again turned resistance. So it's very important to see if we actually manage to break and close below this structure. Why is that important? Because if that happens, at that point, the pattern that we would have is in impulse, correction, higher high, and equal low. Now, in the market, if you have impulse, correction, higher high, and equal low, after that, you expect a correction and then the continuation to the downside, basically for the creation of a regular head and shoulders formation. Now, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the non-commercials, so the biggest speculators in the market are doing, and we check the data for the AUD, on the AUD we can see how lately net positions have been increasing. We went from having minus 44k to having now minus 28k net positions, reaching 39k longs at the moment compared to 68k shorts, with 4.8k longs added with the last report and 3.8k shorts getting closed. We see the increase of the net positions clearly reflected in the price action, with the market creating that massive move to the upside that we have already identified on the monthly and weekly. However, we are still in very negative territory. The market is definitely overextended to the upside. We still have way more shorts than longs from an institutional perspective on the AUD. So a correction lower after all this bullish move is definitely possible. And if we go and see what we have on the CHF, we can see how lately the CHF has been obviously getting the net positions decreased with 1K shorts added with the last report, 1.3K, and 15K shorts compared to only 1.6K longs. Once again, we see that reflected in the price action, the weakness of the CHF and the strength of the AUD. We see that reflected in the price action with this massive move to the upside. However, once again, we are still also here in negative territory as we had when the market was trending to the downside. So also here, a potential correction to this zone before then the continuation is still definitely possible. So we simply have to be a little extra cautious because the market is overextended, but overall is still bullish. So this would be a short-term correction before then more potential continuation. Therefore, if the market will successfully manage to break below the support and print this equal low and then correct to this area, this is where we would have the head and shoulders. And this is the zone inside of which we would have good probabilities for the potential rejection lower. Therefore, how we could be approaching a potential setup inside of here. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, if we get a correction to this area, what we would be doing is monitoring price action from an intraday perspective inside of this area, waiting for the market to shift from an intraday bullish market, as we would have at that point, to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market, at that point, we could be looking for this potential move to the downside and for the market to complete the patterns that we have just analyzed. Now, if you don't know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.